Hey, it's the Crypto Sniper coming at you on Bitcoin. I've got Coinbase up. It's not my typical chart, but I wanted a kind of clean one. And I'm going to talk to you about the trade of your lifetime. That's right, the next decade's worth key trade that is coming in crypto. And before I do that, we're looking at this current structure at the moment. Just want to do a small recap of some of the things. In fact, it's very minor. There's many things we could have said about our engagement with the crypto markets and the coverage that I've done. But the key element is just to show you one or two spots. You're either a regular follower and you take in good faith, or you're not. You will note that in August of last year, 2019, so I'm already in a legacy vid that we did do some while ago, and you'll see the date there, August in transgender, pretty pink, 14th of August, 7,000 views. Yeah, that's good enough. We said why Bitcoin may visit the 6Ks again. This was while it was still in the full blush, the joyful blush of its echo bull market to the upside. And in fact, more as I was speaking, I was also highlighting the fact that you must look at your long time frame charts for direction and how the super volatility and the sell-off wicks here actually were the end of the primary mega bull. And also illustrated here, rather than some falling symbol of some sort, this is in fact volume by price, where we were highlighting how there was an immense amount of likely structural support in and around the 6K level, and that a future down leg should materialize, and we were highlighting the shooting stars that were occurring type structures anyway with the wicks, and that you would probably sell off down to probably get into the 6Ks. Later we got a setup and we said the number is $6,800, and that's the target we see for the downside when we got an inverted HVF structure in there, and that gave us a level. And the final low I think was in and around 6.6 after running the 6.8. We had quite a strong rally, and then we had a final dip lower, a little lower. Anyway, so the point about this is not just to recap elements where we may have been accurate. We haven't always been accurate. You can't be 100% accurate. It's not the objective of this. But it's that in this macro view that we have, and I see a lot of commentators on crypto, most of them were all in the next high run to a new all-time high brigade during this period when we were bearish. In fact, I had guys unfollowing me, calling me a eternal irrelevant pessimist. I actually like that, by the way. Some of you think I'm sensitized by that. No, it's other people's reactions to me. I'm totally good with that. That's what human people do. And it's a good indicator that you're standing to your principles. So it's good to have that happen. And it's illustrative. You can't be liked and followed all the time. You've got to shed people, particularly people that are stuck in belief systems. So we're totally comfortable with that. So we were calling that down, and basically most people were in new all-time highs brigade. We had the inverted call, and the tendency is for them not to see the wood for the trees. Now, if you go out on Bitcoin to a far bigger view, it's our assessment that for the first time ever in Bitcoin's history, on a monthly time frame, we're probably getting a super macro structured continuation pattern. So whilst thinking that we're pessimistic, in fact, we are mega bullish, but we are postponed mega bullish while we are waiting for the clarity of an extreme volatility based event to iron itself out. And there are many ripples that have to occur after. Well, typically the number is 3 in the macro sense, but you might get on smaller time frame fractals thereof, so 3, 5, etc. in the typical Elliott wave structure number sequences that these things occur. But on the big time frame, typically it's 3. So you get a very strong shock. You get a kind of knee-jerk auto-response echo shock, and then you get a third where it's slightly more predicted, slightly more tame, not as extreme, both to the upside and the downside. So overall, this was saying, look, this would be a good place for us to come down and have a bottom and a low at that juncture and point. And rather than just calling for new highs, which is just, in our view, sloppy and lazy, you've had an extremity of a volatility event, and it actually takes time for the dust to settle back down. In other words, you have echoes and reverberations. There's still some volatility shaking around. That energy that was created and then lost, of wealth created and then lost, surges and then sucks back out again, and you have these waves that have to occur. So you actually have gone from a low volatility in 2015, if we flip over to the other chart, and I just leave this historical Bitcoin view for a while, you've gone from, in 2015, quite a low volatility period, which is flat, sideways, quite dull, to slowly building up a trend. And this is kind of it. Coinbase was a bit skippy. It had kind of just started there, that chart. But you had quite flat. That was basing out near the lows. You started to get some moves. You got continuation patterns on smaller time frames, setting up and going and going. And then you got this whole build up. By the way, this chart is already in log scale, which is trying to compress the extremity of the volatility that was implied. So just to give you a really quick peek so that you understand the nature of how extreme the moves are, that's how it looks in regular scale. Absolute parabolic event that occurs. Now that is a huge amount of energy that requires some form of dissipating. And this is why this is taking longer than people expect, because you had an extreme bear to follow that had a final twist in the tail that no one was ready to accept. Again, there were bull market new highs calls at this juncture, in much the same as they were called in that juncture. And these are people that still haven't recognized that you've got to reverberate through your three major impulses, and you may on lower time frames have substructures of that squeezing going on. So quite early on from that YouTube view, we were already of the opinion that you would fail to make a new high at this juncture, and that you would have a down leg in and around the 6K level, meaning that this is a smaller echo bull, and that you're going to have smaller stratum, and you're going to have compression across the top and a compression across the bottom that's going to take a while to take place, and you've got to iron out all this frenetic energy that is still in from the absolute parabolic event and occurrences that have gone on. So come down, make around the 6K, and later we got the 6.8, and then a more calm high 2, and then actually what we end up getting is a massive continuation pattern. So what I want for everybody here, free view, you're getting something exactly on what we think. I've given pieces of this before, but now I'm specifically directing you to concentrating on this, is that in my assessment, you are going to have a super macro event. So our, if we can call it, gift of our assessment to you is that was our theory when we were getting these high volatility events at the second high. We actually thought it was possible even before that occurred, but that was the beginning of the confirmation that we were getting a lesser bull and we'll have a lesser bear to follow, hence this channel, and hence why we were also biased to the short side over there. And that, in fact, we've got a third run up, which we are now investment bias bull, but that we are saying is going to be dull as dishwasher type bull that may take you to, in our expectation, double digits again. I'd be disappointed if it didn't get into the double digits. It could trade below, so we don't know anything for sure. We're just scenario casting and saying it continues to give us that scenario cast, while what other people are forecasting just doesn't seem to happen, which means we're probably on a decent track and we should stay with it. And this is what we're continuing to do. So a medium to decent bull market, as I've suggested. I say bull market, it's a ripple bull that is a mini version of what is already an echo bull of a far larger move. So this is actually a continuation structure. It's a holding pattern for volatility to shake itself out and to get real boring. So the game for everybody observing this is that the good times will come to the patient in Bitcoin again, so much so that for those that called us irrelevant pessimists have actually missed the point that actually we're probably in the biggest bulls out there, but not right now. In fact, it's probably the last time I've ever shorted, I will short Bitcoin for potentially years on any meaningful time frame, and mainly because I think we're going to be ostensibly in a bull bias environment. That's over there. In actual fact, having broken out of this channel, it's our assessment that you are in a weak to mild bull towards the 10.5 to 12K region over here. And it may take its time. It's not going to have the zip of that. It's certainly not going to have the parabolic thousands of dollars in single weeks that was a feature of the 2017. People like to think in terms of association. So guys go, oh, it's going to be 2017 2.0. No, it isn't. It's going to be 2020 1.0. And that isn't the same as 2017. Doesn't have that same newness, doesn't have that same freshness. There isn't all that early adopter money that wasn't early in, but is still pretty early in, all rushing in. It doesn't have all the people rushing with ICOs, buying Ethereum and all of those other things. There's quite a few things that have to wash out. There's still a bit of hangover out there. And in fact, when you look at the alts are rather pitiful in comparison to Bitcoin in terms of how much they were able to hold up. So they are still very much laid low as a result of these down legs, particularly this bear, which to be fair took 85% out of the Bitcoin high as well. But that 15% was quite a resilient 15 that we were left, and has since echo bounced back up. So everybody was hurt by that bear, except those that took the occasional short. So what are we saying? Moderate upside. This is potentially the trade of your lifetime if you have the patience and you don't kill your BTC pot and you trade the single big time frame only, in my opinion, on balance of probability for me. And at any point it could fork and stop following my trail and go off on a journey of its own. But as long as it's coming down and taking steps, I'm going to keep going with it, and then I'll adjust if it adjusts itself. So how would we be wrong? Well, very quickly we'd be wrong if this fell down. I would already be very concerned if we made this inverted head and shoulders level for a bit together. It would be a little bit slow. It would mean we're having a much more complex bottom, which could happen. You could churn around and have a much more, we could bide a lot more time here. Got to remember this took a while to happen too. So that could happen. Where I'd be completely out of the running is if we ran 3-2. If we ran the 3-2 low, this no longer is a symmetrical continuation pattern for upside, and that would be a complete disprover. We went down to the 6K after running to the 14. That would be a bad event for Bitcoin, and that would mean this scenario is entirely off the table. Until it does that, however, we continue to assume success. So this is one of the principles of HVF method. If you're walking like a duck, talking like a duck, quacking, we reach for, the duck hunting rifle. And until such time as you start pretending you're something else, a lion, for example, where we might back off a little bit more, we're going to keep doing what we think you're doing. But that said, remember, this next up leg can take its time. It's going to recover. There's not going to be too much zip. Note the engagement in volume. This is another part that goes with the volatility. Volatility and volume often move together. When you get excessive moves, you get excessive upside volume. You can see the echo had pretty high as well, but not as high. And you can see your low points also had pretty high volume. Remember, we've got a lot of data on here from 2015. And I'd argue, some might say, well, you didn't bottom on so much volume. It should be getting less as we go deeper into the pattern. So at the inflection points where the volume is extreme, the volume should be dropping. Where the volatility is at its extreme, the volume should be as well. Hence there, and there. And then you start to hollow out and get really bored a lot more. And this is going to happen both at the volume level and also the amount of moving. In other words, short time frame traders are going to start getting really stuck. Lots of small time frame patterns may not make their targets. They just gestate, go into a funk, move a little bit in the direction, then come back. If you're on a bull bias, you'll probably be slightly better, because I think overall in the next time period, we will at some point get into the double digits. How far, I don't know. It could be 10K, could be 12K. It could even be a little bit to the high side of 12K. It could be just under the 10K. We could be wrong, but that's my sort of sweet spot zone. So I'm investment long, and I don't expect to be back in fiat for a long time. Even though, and some of you might say, but Francis, after your third high that you're expecting to make and your drift down, which should be even more mild than this selling period, and certainly significantly more so than that selling period, wouldn't you do a short there? Not really, because at any point you could suddenly have a bump, and we could be getting ready for our breakout, which will then be to the upside on the basis that this is a huge bull market since Bitcoin's inception. And on the monthly time frame, you now have the single biggest distinct standalone continuation pattern for Bitcoin that you've ever had before. By the way, the geometry that would generate, and the fact that it's a first in a new trend, would see probable overperformance. So in actual fact, some of the crazy numbers that the likes of McAfee and Max Kaiser, I don't know how crazy, maybe not the ones that say 1 million, but some of the much bigger than you might imagine ones that could go up to 50K and even approaching 100K at some point, could then materialize with the overperformance and the blow off. This will be, guys, associated with real world events as well. In other words, for those of you that followed me on the FX, you should follow my Korean won and the emerging markets failure. What's probably going to happen is coordinated and synchronized with this. This is the difference between just being a pure crypto trader and somebody who looks at all the markets, is that we're seeing other key adjustments that are probably going to simultaneously occur and will be the feeder for why Bitcoin might go up. Say, for example, the Chinese trade thing that everybody thinks is back to bed and safe and normal, which my view is has not gone to bed at all and will reemerges, and we end up with a form of East Asian overly printed currencies doing a major re-rating downwards of their currencies, because they've created a disproportionate amount of M2 to an already profligate Western world. They've gone even further, and that you end up getting major down ratings, for which I refer you to our USD Korean won trade, which could see a run into the dollar and emergings particularly collapse, with a special emphasis on the Asians, much like it was in 97. So the won, the Hong Kong dollar, the only exception being the Japanese yen, which may get fear bid and actually hold up quite well. In fact, be one of the best currencies in a perverse way, apart from maybe the Swiss franc. Even the Singapore dollar could be pulled into it, although it's a good currency. But the Hong Kong dollar, the ringgits, the rupees, the whole bandwagon of Indonesia, the South Korean one is our pick, because you can get trade. These will all go. Now, what might happen this time in that FX, and I'm now talking about a different chart. Go check that YouTube. I don't want to get too involved in this because this is essentially crypto. But what will happen is, instead of all of it going into the dollar like it did in previous crises, most of it goes into the dollar. Even just a small percent. And you're talking about South Korea, you're talking about very alert, very woke to technology nation, smart. Same for the Chinese. You get a small component of that coming into Bitcoin. Remember, it has to chase the liquidity. It has to chase the liquidity. And liquidity is drying up on exchanges across all coins, but particularly the alts, the thin alts. So I would expect Bitcoin to be one of the best. However, there will be some high-flying favorite coins that may well go up in higher percentages, and you can try be the one who picks some of those. The game for me is just be in the right area, the crypto coin token environment when that happens. So what you might have is a small amount of that Asian money all running into, and the rest of the emerging markets could all be pulled into this. With a dollar run and a dollar spike, a la the dollar milkshake theory, you get a small component of that going into the crypto markets. This, I think, will trigger an overshoot. I don't know if any of you have been following the palladium market and some of what's going on there. You'll get that kind of effect potentially. In other words, there won't be too much real Bitcoin for sale, and people are going to have to chase really, really hard to execute on that. So I've thought about time frames for this. You can guess, you can approximate. Generally, the impulses should be getting smaller in duration from high to low. So we've been doing quite a bit of high to low analysis inside our premium community. If you want to find out more about that, the links are below. Jump on and come on board. But anyway, whether you do or you don't, this is in essence our free trade to you. Be long by this point. Be long Bitcoin and or your favorite cryptos, and I would certainly still have a large portion of it in Bitcoin at this point when that occurs. Time equals XYZ. Now, in actual fact, some of this has felt like it's accelerated a little bit. I was targeting post the Trump re-election stroke Sanders election, whatever the case may be. In terms of the election, I think Trump is going to be the antagonist that takes us into the reset, because then he can be largely loathed and resented, which I think is the way of the white male at the moment in this community and environment and this control structure and the master puppeteers. No good should come from them, and I think that would actually be the ideal scenario. But I'm guessing, I don't know. Who knows? Maybe Sanders gets in and then everybody panics about the new world communism. I don't know. There's a couple of options, but I still think that's my most probable scenario. But what will potentially trigger this is trade and currency corrections in the market. Currencies, you can't hide the strata faults across geographic trade zones from currencies. These typically move. Now, Korea's been getting isolated from Japan. It's very reliant on China. China's actually weak. It needs to release a lot of pressure from the amount of money it's printed, so it needs its currency to actually devalue to a large extent. There's a lot that needs to happen there, and they're stuck in a peg type, a de facto wiggle room peg with the dollar. So there's structural pressure that is building across there, and it's across the whole of the Southeast Asia. So at some point, you want to be in that box and you want to be purchasing. And for me, I initially said, if you looked at this video, I said 21 was the year that my guess would be. It may still be 21. So if I just clear the face, 2021 is the break. And then just the geometric target will take you to 28,000, 27, 28,000, but I do feel that you're going to overperform substantially. There's going to be spike value in that. So your patience will be rewarded, providing you don't clean yourself out. The trading environment till then could actually be very tough. In other words, you're going to get moves up and then regular moves down. No real obvious dominance of bull over bear, although I'd say a slight bull dominance for now until we've made the level I've indicated. And then there'll be a marginal, even slighter, minor bear dominance. My choice is to just be investment long throughout that and very rare trading, unless it's very clear-cut opportunities. However, during this last final period, expect spinning tops, expect absolute boredom. If you can recall that period, really low volume, really low volume, really low volatility. So you'll have the Bollinger Bands pinching. You're going to have all sorts of things going on, really low readings on the volatility. Your trade to get you in our sniper community with plenty of beans to spare for a very good life and existence is to execute on this, to make sure you keep your powder dry, your Bitcoin ready to execute on that. You want to be leveraged long there. Don't be over leveraged. You only have to be marginally or moderately. You will be far more successful with a moderately leveraged position. And for those of you that don't trade at all, just investment long, that is all good for the move that will come subsequently. If you excessively, it'll get too emotional, it'll be so volatile, the swings will be such that you'll get yourself shaken out in what could be one of those really second stage mega moves in crypto. That the extent of the number, depending on how much pullback you're prepared to sit through and how much time, in 2 years, who knows where it might be. If we are to be accurate, we can, of course, be inaccurate. It's a wild bull statement that sees us say the things we say, but you only have to think of the amount of debt, the amount of terrible levels of currency that has been printed up to understand the potential scale with a fixed coin offering of 21 million in Bitcoin. Okay, so that is your game for this year and possibly into 21. Now, what's actually happened with this breakout of this trend and this basing out here with a little inverted is that this up leg has started a little earlier than I thought. I think we could be potentially at what I'm going to call our third high this half of the year, which means we're beginning a weak descent. It'll be slow and very indifferent and not particularly brutal in any way for you to sit through, and quite a lot of pausing and a little bit of leg down, a little bit of leg up, a little bit of toing and throwing for quite an extended period. But that could see this break actually take place still during the year of 2020 instead of 2021. As I originally thought. But at any point we could slow down. For example, we could top out at this point and we could trade in a range for a long time before we decide to put on a down leg, and that could be all part of a tabletop, and that could extend. So this will adjust. I can't tell you what it'll be. I don't know what's coming. But it'll be interesting to see what kind of topping structure we get. Do we get a long, lengthy ledge for a while? That can draw the pattern out for quite a while. But if it's fairly quickly over, small little head and shoulders and then bleeds out, you don't know. We could even be this half of the year. So it can go faster, it can slow down, but overall we're looking at a macro continuation. And this, since this shooting stars that you saw on the monthly time frame when we were showing you, has been our suspicion for quite a while, and it continues to be compliant with that. So I don't look the gift horse in the mouth. If it's telling me that you're on the right path, we're going to stay there until such time as it invalidates. An invalidation would be anything particularly to the downside that ran that level, as I've already covered. I wouldn't want to see it even get low. In other words, if it went to 4,250, it would feel a little bit heavy and what I call low slung in structure. So it already starts to be a slight spoiler if we were to break down lower there. I think having got out of this channel that we've now confirmed that bull move to the upside. Okay, it's quite lengthy and verbose. Watch the currencies as well, the emerging Asian currencies, particularly the Korean won, and watch the news for when trade type wars start to reheat up and potential currency situations exist, particularly emanating out of Asia, but that could involve all of the emerging markets as a whole. Because these drivers, instead of seeing everything run to dollar, if we just get a small fork that goes into the crypto realm as a proportion, given how small the total market cap is, we don't need a great amount coming out of some very tech-savvy nations for that to lean very strongly on the crypto market and the most liquid crypto to trade, which might not be the highest in percentage terms, but certainly in terms of access, tradability, liquidity, will be Bitcoin. Okay, hope you enjoy, and I look forward to, in a year and a half's time, seeing all you freshly minted millionaires coming onto our trading community to enjoy further events such as this, if this event does come to pass. Okay, with a wry smile, I say goodbye and enjoy, and that's your crypto update and the great opportunity that comes Plan to execute well on this single trade. Everything else will look after itself. Do not be too big. You will shake yourself out. It will become too emotional. Those are the final words of warning. This is not financial advice. This is just me speculating on the potential direction of an underlying market. And these are my views only. Bye for now, and God bless you all. See you later.